What's up, guys? So in today's video, we're going to be talking about AMC stocks. So I've been talking to some of you guys or in the comments section, and I decided to do a video on AMC because it has been a little bit since the whole coronavirus sell-off. So it went down to like a 52-week all-time low of around $2, and now the stock has rebounded on some really positive news. So first, let's go right into that news, and I want to talk a bit more about where I see AMC stock in the future and whether or not you guys should be buying this stock or not. But before I get into the video, please give this video a thumbs up because it really helps my channel, guys. So thank you so much. Let's get right into it, guys. So what kind of is responsible for a lot of? Okay, so here's an article on Market Watch. It says AMC stock soars after report Amazon held merger talks. So basically, the stock had been absolutely crushed, like many stocks had been crushed. And it says that shares of AMC Entertainment Holdings rocketed on heavy volume Monday after a media report that the struggling movie theater had held buyout talks with Amazon as AMC's value has shrunk since the coronavirus pandemic led to theater shutdowns worldwide. So this is kind of interesting news. I'm kind of curious as to why Amazon would be interested in buying AMC, but it kind of makes sense. As you can see here, Amazon also has Amazon Studios, and Amazon is very familiar with vertical integration. So they did the same thing when they purchased Whole Foods. They wanted to get into the grocery delivery business, but they didn't want to have to simply do a partnership with a different company. So they bought Whole Foods and then they used that to do grocery delivery online. So it'd be pretty interesting, but my guess would be Amazon would use AMC to kind of control their product. And as they produce more movies and more content, they're able to show that content in theaters that they own to vertically integrate everything, guys. So this is interesting news, and the stock had absolutely shot up to around, as you can see, it shot up 30% on that news. It's come down a little bit now. So that obviously would be good news for AMC shareholders because as far as I'm concerned, this company has a lot of serious problems, guys, and mostly to do with their balance sheet. So they're actually reporting earnings on May 14th, and I'm going to talk a bit more about that because I really want to see how the earnings does, dealing with the whole coronavirus shutdowns. So if we go back to the stock, one of the reasons why for me, I think this would be the best thing would be an acquisition by Amazon. As you take a look at AMC stock, it has been absolutely crushed over the last 3 years. So it was at about $27 in December 2016, and basically going on almost 4 years now, the stock it's been crushed. So if we take a look at those compounded annual returns, guys, it's been actually down 20%, negative 20% return over the last 5 years. So this isn't really a type of company that I'm interested in investing in. I like to see clean total return numbers. I'm not a magician here. I don't have a crystal ball. I'm not a big fan of turnaround stories because I believe that if a company has been getting it wrong for many, many years, I need to see a absolutely phenomenal change, catastrophic, huge change in management, a change in business model, a change in how they market to customers and things like that. So I usually don't like investing in stocks like this. This reminds me of kind of the similar situation that I saw happening with Ford and kind of why I got out before the dividend because I'm not a big fan of turnaround stories. I think if a company's doing things right, I think it's going to be returning value to shareholders, and there's no reason to have a turnaround because the company's doing the right thing in the first place. So, but it would be good news that Amazon acquires AMC Entertainment, and let me tell you why. It is mostly to do with the balance sheet. By heading over to Yahoo Finance, you can simply type in the ticker symbol. That's where I like to check out balance sheets. I think the information there is pretty clean and crisp. So as you can see, guys, we take a look here. We're looking at their latest quarterly balance sheet. So as you can see here, they have 13 billion in assets and 12 billion in liabilities. So this company is absolutely overloaded with debt, and there's so much debt in the company that it's kind of eating away at shareholder equity, and it actually has a tangible book value of negative $3 billion. So guys, I want to show you some more numbers to kind of give you a more simplified view of this. So kind of more simplified, I just wanted to give you guys a quick rundown of some of the weaknesses that I saw on the balance sheet. And overall, this is the opposite of what we want to see. So as we can see here, the balance sheet is clearly not balanced. So the current ratio is really bad, and the total debt to is over 800. So they hold just about 265 million in cash, 10 billion in debt, and this was before the coronavirus closures. So AMC is in big trouble. This company is overloaded with debt, and they don't have a lot of cash. And this makes sense why they would look into merger talks with Amazon, because Amazon has plenty of to do with this company. So it's just kind of interesting that they were paying out a dividend in the first place, because it looks like with so much debt, you probably would have made to trim that dividend down in the first place, because the stock has been suffering for so long, over a couple of years, and it just doesn't seem like management was doing the best for shareholders. Perhaps AMC was suffering because, with the trends shifting to streaming, it just seems like a lot of people aren't going to the movie theaters like they used to. And guys, a quick nostalgic point here. When I was a kid, I used to go to the movie time, and then when streaming came up and the internet speeds got faster and faster, I stopped going to movie theaters. I haven't seen a movie in a movie theaters in years, and I'm pretty sure I'm not alone here. So for me personally, if you guys wanted to kind of play the whole movie industry or things like that, for me, I would buy Netflix stock. And the reason why I would buy Netflix stock is because they continue to get things right. So one of the overall arching points that I like to have on this channel is that, I'm not Warren Buffett. I'm not the best investor in the world and things like that. So I try to invest my money in stocks that are really easy to understand and that I don't have a high chance of losing my money. So that's why I say that for me, if I want to play the whole movie trend, I would just go with Amazon. Amazon has a much cleaner stock chart, and they were the best performing stock from 2010 to 2019, and they're doing really, really well this year too, guys. So don't try to overthink things too much. Although if you guys are looking for a short-term trade, I think AMC is better for a short-term trade. But for me, long-term, I'm staying away. Streaming is much more powerful. The whole movie industry, I think it's kind of suffering a slow demise. And with streaming now, you can reach so many more people. It just makes more sense with Amazon, with Netflix having a much stronger business model than AMC. And now you're seeing, during the lockdown, Netflix had a surge in subscribers while AMC has literally like no revenue. So guys, that's just my take on this. Let me know what you think. Please thumbs up this video if you enjoy my content, and subscribe to my channel for more information. So I'm going to be covering where I think the stock is going in the future after they report earnings, because I want to take a look at that earnings report before I give you guys my forecast. But for right now, for me, this stock is still a sell. I'm not interested in this stock. If I'm buying the movie stocks, I'm just going to buy Netflix, and I am a Netflix shareholder, so full disclosure. So that's it for now, guys. I hope you enjoyed this video. Until next time.